and going live on Facebook first. 1 second. One second, because you know, Facebook Live is always tricky. Okay. And all right. All right, everybody. Thank you for joining us. Good morning, good afternoon, good evening to everyone. We are doing the first part, the entrepreneur, and certainly almost always the most interesting part of this two-part webinar on PropTech. And we're going to start with a brief video from our sponsor, IDB Lab. Thank you.
Welcome to the Rethink series, brought to you by Angel Ventures and IDB Lab, the innovation laboratory of the Inter-American Development Bank. During these COVID times, startup founders are scrambling to find their way in the current situation and adapt to a new normal. And startups in emerging markets are no different, yet there are some unique challenges and opportunities. There are some thriving startup ecosystems in many markets, yet comparable emerging markets of Latin America and the Caribbean, MENA, Southeast Asia, they make for unique opportunities along certain sectors which we should be rethinking, considering the potential impact post-COVID. Global investors and corporates are already taking notice, and they've already signaled an increase in funding for some of these sectors. IDB Lab, being the most active venture capital investor in Latin America and the Caribbean for the last 20 years, is supporting this initiative led by our trusted partner, Angel Ventures. They have been doing a lot of work to support the ecosystem, and now we welcome their efforts on building bridges to other emerging markets, to build those synergies that I think can prove more valuable now than ever. So we hope you enjoy the webinar, and more importantly, that together we reimagine how these verticals emerge after the pandemic to generate a positive impact in Latin America and the Caribbean, and that you also join us in rethinking the future for startups. Thank you.
Hello, everyone from Dubai. This is Christos Mastoras, managing partner of Iliad Partners. We are very excited to host a great panel on PropTech with startups with our partners Angel Ventures, moderated by Hernan, and with startups really from across the world and across emerging markets. And in this context, we're very keen to compare notes across our regions, which have many similarities, MENA, LATAM, and South Asia. And without further ado, I'll hand it over to Hernan, who will kick off and moderate this panel, which we look forward to the discussion. Thank you very much. Hernan?
Thank you very much, Christos. And well, thank you everybody who's joining us from different continents. We've had a very successful, Rethink series, having over 30 participants from all over the world. So in this sense, we are super excited to have everybody on board. Well, the idea is for all our participants to have 3 blocks of questions. So the first block of questions will be about what is the company and how are you perceiving from a very, high altitude, the COVID problematic in your vertical and your company. So we're going to kick off with our hometown in Mexico City, Latin America, with, Ocol and Juan Jose Solorzano. So.
Great. Well, hello to everyone. First of all, thank you to Hernan and Camilo for hosting this webinar and inviting us to participate. I'm Juan Jose Solorzano, co-founder and CEO of Ocol. Ocol began operations in 2020 as the holding company of both Propiedades.com and Tucanton. Propiedades.com is Mexico's largest marketplace in terms of non-paid users and inventory, and Tucanton is a tech-enabled brokerage, which is mainly focused on the low to mid-income residential segments. Now, in terms of the question of how COVID has impacted our market, basically the housing market has been highly impacted on the demand side, mainly by driving the transactions down since the crisis began. However, on our end, we have seen continued interest from clients, both through our marketplace and our brokerage services, which we believe mainly stems from being a digital player and offering most of the buyer journey online to segments which have been sort of forgotten by most of the digital players. Since demand began to fall, we decided to fully focus on the low to mid-income segments, which have been the least affected. Basically, from the numbers we have, the demand has been lowered 40% on the low income segment, 60% on the mid-income segment, and on the residential and above, demand has been lowered more than 75%. We've noticed the importance of being flexible, mainly in terms of our sales force, which has allowed us to make this move to refocus the most attractive segments currently. Now, having said this, we have continued to grow our client portfolio regarding higher value segments, and we have built this portfolio from which we expect to take advantage once the market bounces back. So that's our view mainly as of now.
Thank you, Juan Jose. And now we're going to go to literally the other part of the world with Sudarshan to hear from Strata in India. I think Sudarshan, you're in India.
Thank you, Hernan, for the opportunity. So just to give you a background, what Strata does, we are a fractional real estate platform which allows investors to invest into premium commercial rent yielding assets. We pretty much focus on office and warehousing assets is what we've done. It's just been about a year since we started. We managed close to about $15 million in portfolio of assets across 4 different properties today. From a COVID point of view, obviously, a lot of stress has been happening because India has been an offshoring, especially for the IT, which is what was driving the entire commercial real estate requirement in India as such, has been a lot of under stress. A lot of job cuts have happened. Companies are downsizing, companies are doing salary cuts, and more importantly, people are not looking at taking more spaces for that matter. So with all the data which we have over the years, where we've collected every lease sale data of every property, we could estimate that there's a massive, close to about 72 million square feet of office space, coming due for renewal in the next 6 months in India itself, right? So, which means the tenants have a massive edge. I mean, talking about companies like Goldman Sachs, Wells Fargo, etc., who are, have employed more than about 40-50,000 employees in just Bangalore alone. We felt that there is going to be a downward or a sluggish demand for office spaces, and especially with the whole work from home becoming an evident truth for that matter, where most of the companies have decided to work from home, like Amazon, which has more than about 15-20,000 employees here, have decided to work from home till about October end. So having said that, we decided to re-strategize our entire thing. We wanted to continue doing our business. A lot of adoption of technology has happened where site visits have now been done virtually for us. We've been working with a lot of organizations, including Matterport, etc., to get those things organized for our clients so that they can see the property. And with respect to what we did, we decided let's move into warehousing. A lot of requirement from China. A lot of companies are moving from China, are looking at Taiwan, Vietnam, and India as the next destination from an industrial unit point of view, which also means that a lot of warehousing requirement and industrial leasing requirement would happen. And a classic investment product to get into, because the kind of tenant profiles we're talking about are all these blue chip companies at the end of the day. So these are things which we are now focusing on, going by the flavor of the season, where office space are going to be stressed. We decided let's focus on warehousing and the industrial leasing point of view because of the sheer demand which is coming from across the world, and focusing on that. But more importantly, leveraging as much as technology. You're doing that. Be it or not, we have investors today with the 15 million because our ticket size is very low. It's just about $40,000 is the minimum investment one can make into any of these investment opportunities for that matter. We have investors today from about 24 countries who have participated and are enjoying the investment story of the kind of returns commercial properties in India are giving. So again, things have been positive from a COVID point of view as well, because people were locked down, which means we could reach to our target audiences better. Customer acquisition costs drive down drastically for that matter, because we could reach to everyone. We had all the time to explain what we do, how we do it, and give them references of our case studies, and we started operating. So things have been positive for us, especially for our team, because we are a year old, to try to bring all the team members together into one spirit, more importantly, and keep our heads high and scaling the business up. That's about us.
Thank you, Sudarshan. Hearing about the size, of the problem in India really puts, this pandemic in perspective. So thank you for that precision. Now moving over back to Latin America, and we would like to hear from Alquilando and Victoria.
Hello, everyone. Thank you for having me today. I'm Victoria Simon, co-founder and CMO and director of communication on Alquilando. Alquilando is a PropTech company that offers financial and technological solutions to manage property rentals. We digitize the end-to-end process of property rentals in only one place to help everyone who rents. Through a seamless process, we manage collections, we ensure the rent payments on time, and all the parties can do whatever they need until the end of the contract. And we're operating in Argentina and in Colombia as well. And as the COVID impact our industry, the property management used to be done physically and in person, mostly the paperwork and the collections. And in these pandemic times, we have received so far tons of inquiries from realtors and from landlords in order to access to a kind of technology or a solution that can use in order to be connected, or they can be in touch with their properties from their homes. And that was very good for us. And I know for many years, and we've been going ahead the digital transformation in this industry, a lot of time spending on that. But this COVID situation has accelerated that times because people believe that the time of transformation is now, and they must do now. And this is very good for us too. And we are working on closing operations to expand our operation, not only in these two countries, just going forward another ones. That is the most important impacts right now for our company.
Thank you very much, Victoria. And now going back to Asia again, and we would like to hear from Amin from Blueground, based in Dubai.
Hi, Hernan. Hi, everyone. Thanks for having me. In a nutshell, Blueground offers furnished apartments empowered by technology for stays of 1 month or more. We operate in 12 cities across 5 countries: UAE, Turkey, Greece, France, UK, and the US. So typically our apartments are booked by 2 types of clients. From people moving to a new city with the intention to stay a couple of months as part of a business assignment, or people relocating to a city for a year or more and just don't want to go through the traditional process of renting an unfurnished apartment, dealing with multiple parties like workers, landlords, connecting utilities, buying furniture. So these are clients who would value convenience, a fully integrated digital experience end to end, and would like to manage their whole stay through an app or digitally overall. Regarding the market and the COVID-19 situation, in Blueground, we experienced a substantial drop in demand in the first months of March onward. From some of our core segments, I would say, including our enterprise clients as business travel generally is frozen, and there has been a cessation of flights across countries. This has, of course, led to a substantial drop in incoming leads, but over the last couple of weeks, we are seeing some overall demand is improving compared to early May and April. I mean, market by market, I would say, for instance, like Greece, Turkey, they have been less impacted compared to Dubai, that relies mainly on expats and the travel industry. US, again, cities that are very centric with high density like New York, they have been impacted more than remote locations like Seattle or DC. So, but on the flip side, some new client groups have emerged, including like healthcare professionals, given the increased needs of hospitals, people that want a second space to use as an office space in some markets, people who have returned to their hometowns, repatriated and need an apartment with flexible terms and duration of stay, as they are facing a lot of uncertainty regarding the future plans, I would say.
Fantastic. Thank you very much, Amin. And now back to Mexico City to hear from Homie and Ricardo Vaca.
Hello, everyone. Well, Homie is actually very much alike Alquilando. We are a long-term rental solution. So we try to solve the long-term rental process end-to-end, as well as Alquilando. We try to make a seamless process throughout the journey for both the landlord and the tenant. We work with individual landlords, we work with realtors, we work with brokers. So we really make a good team with everyone in the process. So we've been trying to digitalize this process for a long time right now. And this crisis has accelerated this acceptance of the public for different processes. In our case, the digital signatures in Mexico were not valid legally until February this year. So as soon as this modification was legal in the country, we went out and go live with the digital signatures in the contract. So right now with Homie, you can have a full online process. You do not have you don't need to have contact with anyone along the process. So that's a very good thing for us. For the impact on this crisis, as well as many of you, we have seen a decrease on the new business demand. So there's been a lot of this decrease during May and April. A lot of people were locked down, so they were not thinking about moving to new places. But in recent weeks, from mid-May until today, we have seen some increases in people moving from their houses. So we have been seeing some increase in the results. And having such a digital process, we actually don't need to adapt anything to this situation because we can go fully online as of today. So we are managing very well this thing. And for us especially, we guarantee the rent payment. So that was a big thing for us when this crisis started, because we were foreseeing that a lot of people were going to lose their jobs. We were thinking that a lot of tenants will likely default on the rents during March, April, and May. But actually, the scenario wasn't so bad. We had some defaults, yes, but it wasn't as bad as we thought. So overall, we think we have managed the crisis very good, and we will just have to adapt some little things on the office space when we get back to the offices. We don't know when, but we will do that as soon as we do.
Thank you, Ricardo. And to finalize this blog, I would like to ask Sergio to tell us a little bit more about the fantastic story behind Creditas and an ever growing footprint of both places and products. So Sergio.
Great, Hernan, and thank you very much for hosting this. Very excited to see how many good things are happening around the world. Yeah, so I'm the founder of Creditas, founded Creditas back in 2012, so already like 8 years. And I have like the dubious advantage of having lived through the 2000 crisis and 2008, but that doesn't actually help because this is totally crazy. I've never seen this type of situation. I think the worst component is that we don't really know what the hell is going to happen. So all our businesses, even though we have like headwinds or tailwinds over the last 2 months, we really don't know what's going to happen. So it's really frustrating to manage a business in that situation. So Creditas is we started as a secure lending platform using houses, cars, and lately also the payroll as collaterals for our loans. And that reduces the default risk. And obviously it increases our chances of making good IRRs. More recently, we have expanded the model to be more like a modern provider of solutions, which whatever that means. But basically, some of the implications of that is that instead of just delivering a financing so that the customer do like a home renovation, we do the home renovation itself. Or if the customer wants to sell a property, we support the customer in the process of selling the property, but also providing liquidity, eventually making the renovation as well, and then selling it to somebody else. We're doing that same thing for houses, also for cars. So we are already like buying cars, selling cars, fixing cars, and everything related to the car. And with the payroll, we're doing cool things as well. Like we partner with Apple to start like selling iPhones to employees by directly discounting the installment from the payroll itself. On the impact of the crisis, I think that they're like from our perspective, there are like 2 or 3 things that are relevant. One is credit risk, and from that side, because of the fact that we have the collateral as a guarantee, it significantly diminishes the impact. Yes, we do have impact, but when you look at everyone else in the industry, we feel quite comfortable. We saw an uptick the last couple of weeks in March and the first couple of weeks of April, and then it stabilized. And for the last month and a half, I would say that so far so good. That's on credit risk. That helps on the second one, which is liquidity. Since we provide long-term liquidity, we are exposed to capital markets, and the capital markets were totally crazy for 2 or 3 weeks. And now we started seeing some primary issuance in DCM in Brazil. And we actually were one of the first ones of issuing a mortgage-backed security. That was 2 weeks ago. It was expensive, but it was done. And so I think from a liquidity perspective, things are getting better and better. And now the final component, which actually Surchan talked about, that is the marketing cost. So it obviously went significantly down. So now you're able to grow much healthier than 3 months ago. So I would say that customer acquisition cost fell by 60%, 70%, just because you need to invest much less than that. So we are like trying to get our head around that and making sure that we use those opportunities. We also open an office in Mexico. Just to conclude here, we are pre-operational in Mexico with a team of like 30 people there preparing the platform, and hopefully we will be live over the next 60 days or so.
Well, welcome to Mexico, Creditas. And well, thank you very much. This concludes the first block of questions. Very, very interesting insights. But now we want to get a little bit more of meat, right? And before I actually continue to the second block of questions, I would like to remind the audience that we're certainly taking questions from the audience. So please make sure to send them over through the Q&A section in your panel. We already received the first question, but towards the last 15-20 minutes of the conversation, we'll be taking questions. So now for the second question, we would like to understand a little bit more how has the company reacted to many of these challenges, right? How are you guys handling the situation? Has there been like a hiring or marketing freeze? I mean, some of these questions have already been answered for sure. What about like the country or city lockdowns, health preservation? How are you dealing with panic? And now, one of the most important ones is, how are you guys handling the actual, process of buying or renting a house? I can hardly think about any other process that involves more human interaction, right? Like if you're buying a house, this could potentially be the most important, acquisition that you're going to do in your lifetime. And renting a house also, it's demands a lot of like hand holding. So, I mean, you guys coming from so very spectrums between, buying, renting a house or using the house as a product, how are you guys, handling all of these like now forced contactless operation to say the least? And also wanting to hear a little bit more about, some of these war stories. You guys are in the middle of, homeowners or people who want to buy a home or rent a home and landlords. And I'm pretty sure you have to handle some pretty rough situations with many of these like stakeholders. So I would like to see, if platforms have provided some sort of, I don't know, preferential rights or liquidities or, a short-term financing or lending, or how are you guys, working with, both parts of the spectrum of your stakeholders to make, things easier? Again, while this panic is still quite abundant, right? So I'm going to follow up with the same order for consistency. So we'll kick off with Juan Jose and Okol.
Perfect. So let me break up these different questions. In terms of the situation, I think we can all agree that definitely cash is king. You read about this, you study this, but until you live a crisis like this, you really grasp the idea of how important it is to have cash at hand. And our aim when they started was to have at least enough cash to last us the next 12 to 18 months, given that we believe that capital markets will be pretty closed during this period. We obviously implemented a hiring freeze. In terms of marketing, we're still investing. Our business depends a bit on that. And we also made the necessary team and budget cuts to enable cash to last this long. I think it's pretty tough. It's never easy to lay off people, but I mean, you had to take certain actions given that we didn't know how deep this crisis, and we still, I think with following on what Sergio said, we still don't know how long it's going to last and what the outcome is going to be. Now, strangely, I think the timing was pretty rough for us. We were closing an investment round just when the crisis hit. We were about to close the deal and crisis hit. So we had to restructure all of the changes in terms of the hiring freeze, the cuts, etc. But we were luckily able to discuss all of this with our investors. And what we decided together with them, and given that they do believe in the business and our focus, we were able to increase the amount of money raised. We obviously took a hit in terms of maybe the conditions we would have gotten had we had a crisis, but it was more important to actually close around and get the money to take us through this. In terms of becoming a contactless company, we have an interesting mix. All of our admin and tech teams did work from the office. So we were able to transition this pretty quickly and easily to a work from home scenario. Our sales team, however, did work remotely before the crisis. And this is what has basically enabled us to take advantage of the situation, to be able to continue to service clients. In the traditional part of the business, the big developers, their main channel of sales is actually people who see the ads near the developments, go and have walk-ins to show them the home. This market became totally dry when the crisis hit. What we had before was basically to work through an appointment-only service. So we capture our clients online through our marketplace. We put them together, be it with brokers or be it with our brokerage service through our agent network, and we take them through the whole process. We try to make the match. We profile them first. We make the match with their best option, and then we have an appointment service in order to go visit the homes. Obviously, demand did go down, and the number of clients visiting homes is less now than before the crisis hit. But given that we do have this appointment service, has really helped us. April, we got a hit. We got lower sales in most of the segments, except for the low-income segment. However, in May, we have started to grow, and we're beginning to see the market bounce back. This type of service where we have mainly a digital presence has been, I believe, the most important part of what has kept us alive and basically as a good option to clients. The number of clients interested in buying a home has increased. However, this situation of making the visitor to be had has basically made our process a bit longer than it used to be. So we're actually expecting in June or July to actually have a big bounce back once the situation gets back or goes into the new normal.
Thank you very much, Juanjo. And now I would like to hear from Sudarshan in Strata.
Perfect, great. Thank you so much. Just answering one after the other on the hiring freeze, we've not, in fact, things which worked in our favor, we had just taken an investment round only in December. So we had enough runway for about 2 to 3 years before before COVID happened, for that matter, in India. Things went well because companies were, trying to lay off people. People were having a lot of pay cuts, so we could attract a lot of people. We went out in the hiring mode. We absolutely kept our bar very high with respect to the kind of people we want to hire. Just in Bangalore alone, I think more than about 25,000 people were either laid off or had massive pay cuts where they wanted to leave their organization. So with our investors, they had invested in close to about 70-80 of their portfolio companies. We try to use them as references and start hiring them. So we told them to start a drive in their organization itself in terms of hiring in their portfolio companies. So that helped us because we got references which were great, and we could hire a much better team what we wanted. So we went and where we were just about a 20-member organization, we're now a 38-member organization in the last 2 months. In spite of the whole COVID, where we've not physically met them, the whole team has adopted to the whole concepts of team meetings, virtual meetings, webinars, etc. That has taken up. The team has gone more closer. One thing which has taken a toll is because of the whole work from home, which everyone's been doing. We don't keep a track of whether today's Monday, today's Sunday. We've idly been working 7 days a week, working in my favor as an employer, purely because I can extract the maximum out of it, which in a normal duration is usually between 10 to 6 and you're going home. Today, we're idly working every other day, and we don't have a proper routine. So that has helped us to all the activities which we wanted to do till June, July has idly finished by May itself for us. In fact, like I said, it's been something which has worked in our advantage in general. But otherwise, with respect to considering the business which we are into, we own properties on behalf of the investors, and we manage them when we fractionally sell it into smaller ticket sizes. So we've got blue chip companies as tenants in our properties. They have come forward asking for rental waivers and a bunch of other things. So instead of giving any rental waivers, we let go few escalations of the rental escalation, which was due in the year after, because something which we know which is going to get hit, especially the office market in the next 6 months to 9 months in India, for that matter. We thought might as well maintain the tenant relationships more stronger. Let go certain things which will repay you back in general. So we decided to, obviously subject to our consent of all the stakeholders and investors into that property. We requested them if you'd want to give some kind of a waiver or an escalation, but in return, let's ask them for an extension of a lease by another 1 year or a 2 year. So small hedging here and there, which benefits them and benefits us, is what we established ourselves so that we can make a much better thing. But with respect to transitioning to a completely contactless company, in fact, we are working from home. We are not planning on stepping out for the next 2 months as well. We've completely adopted to the whole concept of webinars and virtual meetings. Our stakeholders and investors on our platform have also done that. We took a $10 million warehousing asset about 2 weeks back. We funded $5 million in 2 weeks itself. Again, shows the testament, which is the fact that the whole stock market is volatile. Today, dollar has gone up about 10-15% to the Indian rupee, and bunch of other uncertainty around. People are looking for more stable assets. People are looking for more stable returns on their capital as well. Nobody wants risk of capital. For that matter, where you can have the option of eroding your entire capital which you're investing in. Risk on capital is fine. So investors are now looking at moving the money which they've invested in capital markets, which is bleeding heavily, into far more something which is more stabler assets as well. So that has worked in our favor at the maximum. But more importantly, the kind of customers which we wanted to, and again, trying to reiterate, we didn't go low on our marketing budgets. We in fact ramped it up because we wanted to reach to our target audience, because we are an early stage company for that matter, just being a year-old company with about 2,000 odd users today on our platform as investors on our platform. We wanted to increase that. So we went all out where most of the companies were cutting costs. That's when it drives our marketing costs down, but at the same time, we could reach to 5 times the kind of audiences which we wanted to reach as well. So this has been great. I mean, if people use this as an opportunity to reach to their target audience much better, I think it's the best time. But more importantly, we felt that there's going to be a lot of distress in the market. Many people might want to offload their illiquid assets because, again, cash is king. Their businesses are affected. They would want to offload. We are trying to make the most of these opportunities and trying to gobble up assets. I mean, going by what Warren Buffett said, we are very greedy when the whole market is fearful, is what as a formula and as something which we are adopting and trying to get the maximum for our investors today.
Thank you, Sudarshan. Very, very interesting lessons, to hear from your vertical and in India. And now again, back to Latin America, and we'd like to hear from Victoria and Alquilando.
Very good, very good. I would like to go through all the items you have mentioned in the question in order to not to forget anything. About the cut of marketing and HR expenses, we have cut major marketing investment to focus on the opportunities we have already under negotiation. So we focus on that, and it was very good. About HR, we have stopped new hirings, but we haven't reduced the team. Instead, we have optimized the functionality, and it was very good. Lockdown here in Argentina, and moreover in Buenos Aires, it is the longest in the world. We have already 70 days of lockdown, but we have more than 10 over coming, and we don't know if there's more. Fortunately, it haven't affected how we're working on our daily operations. And is my role, operating role is one of the roles is communicating. We have maintained very frequent communication with any of our stakeholders in order to calm down the panic. It was the best way to do so, and it was worthy. About actions taken, the most important one is that we have created special credit lines for our customers to help to heal the situation of the impact of this COVID. About the reaction of our customers, what have done with them, the most important thing is improve the communication and the processes, because we've been, as we are a digital platform, it was not that difficult to work remotely. And most of our collaborators used to work previously in a remote way, but it was challenging at the beginning how it would be done in the end, but it was very good. We have done and achieved to work remotely very good. The customers react very good. I don't know if we are going to need in the near future a physical office to keep working, and I don't know whether the lockdown is going to end here. So we are thinking about working from home is here to stay. We are very good with it. And of course, some meetings, some webinars, dynamics have helped a lot to stay in touch with customers, with prospects, with any of the way of communication we have done in these days. I'm sure it's not only time saving, because you don't have to drive across the city to meet someone or to have an event. Just doing it online, it's better for your productivity, and it's better for the team culture, because most of the collaborators maybe they are alone at home or they have families, but this kind of work from home thing have helped us a lot to improve the culture and to get together, and we be more confident of ourselves and to be a stronger team afterwards.
Thank you very much, Victoria.
You're
And
welcome.
now over to Amin in Dubai.
Yes, so to answer questions, I think one of mainly the main challenges we have faced as a company, as a startup, is basically like to go from hyper growth mindset somehow to a no growth and basically a cost cutting kind of mindset. So just to basically give you an idea, as a startup, we raised $50 million in Q4 last year. So for everyone in the team, technically was excited like about this amazing news. Like we had plans for hypergrowth to open new cities. So that shift in the mindset between hypergrowth to like basically we need to be more cost cautious and focus more on what we do right now, and basically maybe shift some of the focus and the talents and the resources to focus more on the technology part, which has been always like one of our major focuses. But like I found it like from the management perspective, it's not a given. So it required some work and it required some adjustment in terms of the company culture and the company kind of processes, generally speaking. But coming back to your question, I think at Blueground, our reaction was guided by 4 principles or directional plans. First, and most importantly, there is the people aspect. I mean, as a company, first we had to take the right measures to protect our human capital. I mean, since we started the company, we have recruited many talents, especially in the tech side, in software engineers, and we had basically to preserve that talent somehow. And the second aspect of the people's aspect, I would say, is the guest and tenant that we have in our apartments during these difficult times. So from early March, we launched a work from home policy, and that was as a precautionary measure and before the lockdown started in any of the countries where we operate. So we had some time, I would say, technically to adapt because it was kind of not a forced decision. We took it ahead of time internally. So from the guest side or tenant side, we established strict health precaution, like protection rules for our field team as per the CDC, DHA, like Dubai Health Authorities here in Dubai recommendations, and also made sure that all apartments, cleaning tasks and maintenance intervention are compliant with these rules. Second, there is the operational and the business continuity aspect that you guys mentioned in your interventions. So we had to adapt to each country, city specifics when it comes to the lockdown measures. And it makes it a bit more complicated when you're a startup present in multiple countries, multiple cities, because like in many cases, you have to move from a centralized kind of operational process to a local one in order to be more efficient in adapting faster and to the new restrictions, I would say. So, and this is like, it includes like maybe small operational things like adjusting our check-in and check-out sign to the new restrictions, like related to the lockdown, responsiveness to client requests, including maintenance in other requests, I would say. But also in terms of business continuity, from the side that, or I would say like we had to pause first our growth. This is one thing that we had to do, like many other companies, and also to stop hiring, to adopt a more flexible cancellation policy for our clients and prospects. Because like we had to take into consideration the increase in uncertainty in the space. So many people, they were hesitant to book a property or an apartment if they knew that they need to, like they had to pay a cancellation kind of fee, or like there is a minimal duration to do that. So we had to be more flexible from that side. And also substantially reduce our rent rates up to 50% in certain locations that were impacted massively, and adjust our business model to cater to new demand, as I mentioned earlier, like people needing a second space to work. So given the shelter in place orders in our cities, so we noticed that many people, they, for instance, if you are like in a lockdown in your property, you cannot go to the office, you have a family, you have kids. Some people, they prefer maybe to take a studio to work from it during the day, and we had such kind of demand in some cities like in Istanbul, for instance, or Dubai. Another space, like people needing a second, another thing maybe I would mention is, as a company, like just maybe to explain to everyone, basically a part of our value proposition, we rent a property or we lease a property from a landlord for a long term, and then we furnish it, and then we offer it on our website where the client can basically check live availability, make the booking online, make the payments online. So technologically speaking, we were like basically contactless from that point of view. So when it comes to the furniture, in our initial design setting, for instance, we usually had like office space. We prepare an office space in each of our apartments. During the past few years, in many cases, we had clients asking from us to remove it because it was like basically not needed, and they preferred to have it decorated or having a different items in that space. During these last 3 months, we had a surge in basically customizing the apartments and to add like offices, like an office space in each of our apartments. So this is one of the things that we had to adapt to, for instance, coming from the clients. Yeah, and the last two aspects are related to cash flow management, working cap optimization, and cost control measures, of course. And these are points that have been mentioned by other panelists, so I will not exhaust on them, I would say.
Thank you. I mean, as someone who is working from, home with children, I can certainly relate to the urge of trying to find a second space that, you can work more pleasantly. So thank you for that. Now, coming back to Latin America, and we'd like to hear from Ricardo and Homi.
Thank you, Hernan. Well, it has been 2, 3, almost 3 months, very challenging, very exciting and demanding for all of the companies here and everyone. But for us, the first steps we took was reacting kind of ahead of what was happening here in Mexico. So when we were seeing that the crisis was going to hit, we moved every employee to the home office model, and that was before around March 12 or 13. So that was around 2 weeks before a full lockdown here in Mexico. So when the lockdown was told by the government, we were already working from home. So that was a good move from our side, because we were trying to protect most valuable resource, which is the human resource. And then we had to make a fast but efficient restructure of the team, in terms of we were expecting a lower demand of new business. So we had a big team of acquisitions. So as well as most of you, we received a investment round in December. So we were kind of aiming for hyper growth mode, and we were forced to switch that to cost saving mode. So that was a very hard one. So we actually had built a very big team to be prepared to this hyper growth stage. And given the circumstances, we were forced to switch some of these tasks of the employees to more accurate tasks during the crisis. So for the acquisitions team, for example, they were not going to enroll a lot of new people into the platform. So we used a part of those teams to try to negotiate existing rents on the online properties, trying to pull down the prices so we can keep everything moving. One part of the customer service team that was not going to attend a lot of customers during the appointments was moved to the collections team because we were expecting a lot of trouble in the collections department. So we were shifting a lot of people around because we were foreseeing an increase of volume in certain areas and a decrease of volume in another area. So we were trying to restructure the team that way, and that was done before the full lockdown in Mexico. So as soon as the lockdown was announced by the government, we were making some cost-saving measures. So one of the biggest ones we made was the marketing budget. That's a big one on our budget, on our monthly budget. So we reduced that to maybe 10 to 15% of the original budget, just to have a lot of space there, because as you have all said, cash is king, and we don't know what is going to happen ahead. So we were trying to save some money there during this crisis. Also, about the team, we were trying not to make a big layoff because we actually just hired a lot of people, so it didn't make a lot of sense. So it was a very hard discussions with our investors. Hernan is here in the call, so this was a very hard one to discuss with our investors, but we just fired the low performance. That was about 7% of our employees. That's a very low number of employees. So we were trying to be efficient, but not lose the valuable people we just hired. And we also make a very strict hiring freeze. We were supposed to be growing the team right now at very high rates, but we are not hiring anyone since March. So that was the things we were changing about the team as such. Also, we went into a big scenario where we were trying to make some savings all around in our expenses. So we negotiated with our office spaces to cut our office rent in half. We actually managed to do that, and that was a big saving for us because we have a very big office space in 2 different cities here in Mexico. So we managed to cut those rents in half. We also made some adjustments in the tech licenses we use. So we try to decrease the volume of individual licenses we have over different things. We also get rid of some nice to have software, but not a must have software. So we were trying to make cost efficiencies all over the place, and we managed to cut around half of our burn rate from 1 month to another, and we will continue to cut those expenses in the following months, just to keep on the expectations to see what happens next. That way we are able to push on the accelerator if we need to, but if we don't, we will continue to be on this cost saving structure. So we will be very fast to adapt to the situation, whatever happens next. In terms of the business, we made some adjustments, as I mentioned previously. We made this launch on the digital signatures. This was at the beginning of April, and we were the first company here in Mexico to be signing leasing contracts with digital signatures. And right now we have signed over 300 digital contracts. So that's a big win for Homey. We also try to push our landlords to make some video tours, some basic video tours on their properties, so we can get rid of the appointment part of the process, so no contact there. This is a hard part because when you are looking for a new place, you actually need to see the place. You have to be there, you have to walk the place around and see if it fits around your life. So this was a very hard part to do, but we have managed to rent about 40 to 50 properties with absolutely no contact. That means that the person leased the property completely online. They didn't visit the property prior to signing the contract, and they saw the property the first time when they were handed the keys and they were going into the property. So this is possible. We have done this, and we are thinking that this is going to increase along the future because people are going to look for more contactless solutions. So in that regard, we are trying to push more for professional photographs on the apartment, so you have a bigger perspective on the space. We are also trying to implement some floor plans, so you get a more space. Yeah, so you get more a real sense of the space there. And also, yeah,
we're running out of time, so I have to cut you short. Sorry, and we have to. Okay, so before moving to Sergio for his final comments on this blog, and we'll come back to everyone for very brief intervention on the future. I would like to remind everybody that we have some polls going on regarding who you are and how do you find the content of the current property tech panel. So I will kindly ask every one of our attendees to please answer those polls. And now for our final intervention in this second block, I would like to ask Sergio and Creditas with the impressive growth and many hats to talk us briefly about what is Creditas doing in this during these times, given the context that was previously mentioned in the question.
Good, thank you, Hernan. I'm going to try to be brief. The first decision that we had we were lucky enough when we did the budget for 2020. That was back in November. We created a scenario of what would happen if the capital markets collapse in Brazil. What would be our reaction? And obviously, we were not thinking on a pandemic situation, but essentially that's what happened. So we almost took the red book and started executing the book, and the target of the book and the tagline was be cash flow positive. that was the objective. We had been 8 years running the company with negative cash flow forever. It looked like an ever increasing negative cash flow, and then in essentially in 3 weeks we became cash flow positive, which is healthy once in a while. So the actions were, number one, cutting on marketing. So we reduced marketing by 85% in 2 weeks. The impact of the reduction of marketing was a reduction in the growth rate of the company. We were growing by 10% every month, which is 3x every year. And then with that reduction in marketing, we slowed down the growth to something like 4% every month, which means 80% year on year if you continue growing at that pace. The impact of that is that we stop consuming cash, because most of the cash that we consume is on marketing that comes back through the repayment of the loan. And obviously you become much more capital efficient with slower growth, which is more like a traditional company from that sense. So in just 2 weeks, we became a more traditional company in the growth rates. We decided not to do layoffs, so just focusing on business as usual. And we have 1,600 employees. So we didn't have a commitment of let's not fire anyone. So we just continue executing on promotions and terminations depending on the performance, which means attrition of Creditas has always been a 2.5% to 3% every month. That's a typical employee attrition that we have. And now it went down to 2% because there are less people that leaves to get to get another job. So we reduce attrition a bit, but we still continue like terminating people due to low performance. So we got into that mood in April and May, and now the teams are preparing for the ramp up again in June. Probably July is going to be like already like a full month of growth, going back to 10% growth. The reason why, I mean, if we were rich, we would have continued growing because we like the credit quality that we are seeing. We don't see that there's going to be like a significant deterioration provided that you have the collateral of the house and so on. We have loan to values of just 35%. So I have like a triple collateral on the loan that I deliver to the customer. And it's perfect timing to actually lend money to people because there's no one else that is doing that. And we think that the world, even though it's going to change a lot, I don't see a world with 50% unemployment forever, which if you like select the right type of customers, then you will be better off. And so that's basically the decisions that we took besides most of the ones that you guys mentioned before. And regarding the stakeholders, we actually didn't, we were not that active in loan mods, in modifying the contracts, because if you start like doing like a lot of modifications on the contracts, you don't know what the hell is happening with the portfolio. If the customer cannot pay, then you modify the contract, then you don't know if your default rates are high or low. So we only did loan modifications for 2% of our customer base. You know, the good thing that we have so far is that the portfolio that we have been accumulating over the last 8 years is performing very well. Since you have like real estate collateral, the loans are going to be extending for 15 years, which ensures that you have like a cash flow machine that is bringing cash back to the company, and that you can take that money and reinvest in it in like new businesses, new growth, and new customers. That's a bit of it. I think that Hernan froze. We have no panel coordinator.
Yes, apparently we have managed to lose Hernan. I've been trying for several years, but you guys managed it in a minute. Oh, there he is.
Here we are. Sorry, for some reason I disconnected, but yeah, we're here. Sorry, missed it. Now, is Camilo frozen or did we lose him? Okay, we're back online.
No. I just turned my camera back off since you're ready to continue.
Okay, fantastic. Yeah, you're not getting rid of me that luckily. So guys, apologies for that technical mishap. So for the final set of questions, and I will ask you to be like very brief to give some time for the Q&A that we have in stock. You know, just final comments and, you know, the new normal, right? We're all hunting for that. And in your vertical, how do you see that happening? How do you, you know, think that you will manage? But again, try as much as possible to be brief and concise on how do you see the new normal in your vertical. So we'll start off again with Juanjo from Ocol.
Thanks, Hernan. Well, basically, this crisis has made us focus more on the value of flexibility and on trying to help clients remotely. Basically, developing online tools to better serve our target market. Having said this, the online tools are different depending on the segment you're focused on. So given our segment, many people question us like, do low-income people actually use online services or go online to search for homes? Basically, they do. And the more we develop tools for them, we notice that they actually do use them, and our client base continues to grow. So we're focused on continuing to do that. And through Ocol, basically, we merged both, well, we created a holding company to put together both Propiedades and Tucanton here in Mexico, trying to integrate both companies to better serve our clients. And by doing this, from the beginning of the year and operating together, we have seen that we can actually better service our clients by taking them through the whole process. Since the moment they go into our marketplace, we're the first point of contact with them. And of all the clients we actually offer our brokerage services to, we take them from beginning to end until they own their company. I think this integration needs to happen in two senses. On one side, to create companies that become more valuable for investors like yourselves, but more importantly, to actually create fully integrated players and platforms can offer better solutions to clients. Basically, right now, everyone's saying that we're in a buyer's market, but even through the crisis, I do believe that we're still in seller's market, in the low and mid-income segments, where basically the developers and the people who offer homes have most of the power and dictate how the process works. It has been clear that there is a very high need for housing in the lower income segment, which are basically located in suburban areas. So in terms of changes and moves from cities to suburban areas, I don't see this happening. I see this continuing to happen, given that low income segments can't afford to live in cities. But actually for people who can afford to live in, I don't see this move happening, since all of the jobs and basically most of the services are really located within cities. And as in terms of all of the question of VC continuing to fuel growth, I think there will be VC money. However, it will be more limited, and it will be focused on companies or startups which are basically outperforming the rest. So this will push the market more towards integration, and I think it will be one of the largest impacts of the crisis generally.
Okay, thank you, Juanjo. Now, Sudarshan, any final thoughts?
Yeah, so just to conclude, I'll keep it very brief. Seeing what's happening across, especially in India's point of view, we've changed our business model. Like I said, we were earlier focusing on office. We started moving on the warehousing and the industrial side. More importantly, adopted the whole option of virtual tours for the property, powered by a lot of other tech companies which we working. We earlier not thought of doing that, but it's still very physical touch in nature, where someone wants to see the property before he is investing in, for that matter. Allowed us using technology to even scale this up across different continents where we have different investors. But more importantly, I see a huge trend of changes happening in the whole commercial real estate business. More importantly, earlier the thumb rule was about 80 square feet. One person used to get seated. Now I see a trend where it's going to be about 125 square feet for every person. So even if work from home becomes a norm, especially for the kind of business which we are into, we see that being subsided with the kind of more requirement of more social distancing norms, which companies would want to start adopting, so that their requirement for real estate would keep going up. So this is what we see predominantly having. But again, like I said, if work from home does become a norm, I see a huge requirement in tier 2, tier 3 cities for more organized warehousing, etc. Because people are going to stay there. So they obviously would want to consume more, and things would change as well. Just speaking on the last one, with respect to the VCs fueling growth, I think they have all the money and they are looking for more and more companies. But one thing which, especially very focused from an Indian point of view, where most of them were focused on high growth for their entire businesses, now are also now talking about, let's have the unit economics making more sense. Gone are the days where people were fueling your customer acquisition cost and all the kind of burn rate you were looking at. I think investors are now looking at more robust businesses which have a clear path for profitability. Something we put it into our DNA from day one, that we would be profitable in 3 years itself. In fact, looking at the current burn, what we have and the business we're doing, we definitely look to achieve that very soon. Yeah, so that's about it.
Thank you, Sudarshan. Yeah, definitely that echoes Sergio's comments, and I think, the search for, those hyper growth unicorns has long gone, and now we're looking for camels, horses, and so many like different, more mundane animals, I would say. So thank you for that. Now giving over to Victoria in Alquilando.
Okay, thank you very much. I will be very brief. Well, since this pandemic, our business model have not changed, and I don't believe it will in the future. As I said, the remote working was doing very good during these days. So I believe it's a great achievement for a team, and the way we work and the way we are planning to work ahead this 2020. We've been working with other startups and company alongside these times. We are working currently with startups and company, and I believe we will doing in the future more. And I don't know if we be people moving from city to another city because things in different countries and cities have been very not the same. So I don't believe whether it's going on or where we will be in the final days of this year. But maybe things change in cities, but I don't know what it's gonna be. And now we are talking about fueling the growth of our startup with many VCs, and they are trying to do the best on supporting startups that are doing very good doing in this context. So I believe it's very good sign for us because we are working a lot these days, and that is a good point. But we're not thinking on merging or doing that kind of things in these times because we are planning on growth and expanding.
Thank you, Victoria. Now, Amin from Dubai.
Yes. So from my side, I think one certain thing is that this crisis has triggered several changes in consumer behavior anyway. So, and we are fast forward or jumping at least, I mean, already 3-5 years into the future of PropTech, in my opinion. I mean, the same way we know that e-commerce and certain other industries that have shown some resilience to the crisis were more or less in a better position to adapt to the new normal by leveraging their existing digital operational capabilities, contactless technologies, and B2C presence. Many PropTech players are building these capabilities now, making the products and the company somehow more tech-enabled. Certainly, some were more ready than others prior to the crisis. But one common challenge or barrier prior to the crisis, and especially in emerging markets, was the consumer behavior and the attachment to unestablished reality, which we call like market standards. And in, like, for instance, in Istanbul or Dubai, where I'm kind of doing business, this could be simple things such as settling the rental payment by checks or cash versus online payment, visiting a property or viewing rather than relying on video or 3D guided tours, and other things. Deviating from these standards was perceived as disruption and requires a market education effort, which comes at a high cost and uncertain returns. And usually most of the players or startups, they try to serve a market need and kind of leave the market educational effort to be as a long-term kind of goal that comes with the expansion and becoming a market leader somehow. I mean, it's the case of Uber and other kind of startups that started like before becoming a market leader. It's difficult basically to dictate the rules of the game, I would say. So the new reality is that there is a certain shift in risk perception from the consumer side. Right now, people prefer to have a contactless experience, basically to eliminate that health risk hazard versus meeting for a contract signature or payment, or to conduct a business kind of meeting. So this is by itself a huge opportunity for PropTech, in my opinion, to be more tech than ever, I would say.
Okay, thank you very much, Amin. Now, Ricardo, final comments, very brief, please.
Yeah, so I completely agree with Amin. I think the big part of the change will be on the consumer side. Most of us are already very digital, so our operations will not be that much affected. Maybe some little changes here and there to be more online, to be more contactless, but overall, I think most of our business models can handle very well on the digital world. The biggest impact that we can see is on the consumer side, which is very positive for us, for any of us, because there will be a lot more of acceptance of this kind of transactions with no contact, with everything digital. So the consumer perception about the security or the protection you have over these processes will improve. So that will get more business to us. And I think overall, the biggest impact will be there on the consumer side. On the business side, I think we will just need to adapt to some little changes on the office space and so on and so forth. But we will have to be very efficient to take advantage of this consumer change and to leverage as much as we can these times and be part of the increasing digital era. So if we are already there, we should leverage on this consumer behavior change over the following months.
Thank you, Ricardo. And finally, Sergio, any final comments to close off the panel?
Yeah, I think there's this process is creating a dramatic destruction of wealth in the world, and that is going to have like a toll on all of us. Especially in early stage where you have like angel investors, and that's going to be tough to do like early stage investing these days. And on the later stage, I mean, the good thing though is that the private equity firms and growth stage funds are capitalized. They actually fundraise like a lot in 2019, so they do have money that they need to invest. So that's like sort of like a good news. But definitely there's going to be less free lunch on the table and less like easy money. And unit economies will need to improve. Companies will need to go cash flow positive very soon. And to do that, from my perspective, there's no secret. You need to increase revenues and reduce costs. Reducing costs is the easy part. It's I remember the economist talking about it, saying you can start by reducing the number of different flavors of water that you have in the office. Instead of having like 6 different flavors of water, just carry to one, pure water. And but on the revenue side, our thesis is that to increase revenues, instead of increasing prices, you need to increase your ability to monetize customers. And that involves moving from being a monoliner to being like a full-fledged one-stop shop, right? So it's like a bank. It's easier because you have like credit cards and checking accounts and investments and this and that. You can monetize it through different data sets, right? So yeah, I think that's where we are heading to.
It seems so simple, and I guess people have forgotten, but in the end, it comes up to revenues and costs. So thank you for that. So with this, we finalize the panel. We're extended over time, but if the panelists allow, we'll like to take 1 or 2 very brief questions from the audience. Very quick, we have one that's very interesting and goes across the board, and it mentions, how could PropTech help to eliminate the speculation factor in rents, sale price of properties, right? This is since prices are backed by a comparative analysis in any given area and or offer and demand acceptance. But since now and probably in the short-term future, the market will be a buyer's market. So trying to remove this factor could be an interesting selling point. So again, comes down to how can PropTech help to eliminate the speculation factor in both rent and sale price of properties? If anyone want to take a stab at that?
I can take like a first one. I think that PropTech helps in providing transparency to the market and providing liquidity to an illiquid asset. So real estate is illiquid. And what we are doing, all of us, is providing liquidity to that market. With liquidity, you eliminate the anomalies in the information flow, and then speculation falls just because you are making the markets more transparent. And transparency in the market, it's not about just showing data. It's about streamlining the process. It's about how can I go with Alquilando or Homey and then have like a rental tomorrow. And then if I want to leave 1 month down the road, I have no penalties because you guys are providing so much liquidity that everyone can go in and out, right? So I think that's very important to provide liquidity to those markets.
Okay, fantastic. And anybody else from the panelists want to take a stab, or we'll jump to a second question?
Well, I
Okay.
think one of the biggest things that PropTech could help on this specific subject is that we have real information on the real transaction. It's not only what people see on the listing pages or what they think the properties are worth or they hear about them. We actually have the data of the real transactions over time. So this will add up transparency, as Sergio said, to all of these different industries. So real data always helps to eliminate these factors.
Thank you. There's one quite general as well regarding marketing costs, right? You guys have all mentioned that you have been cutting like marketing costs and you know many of these things have been beneficial to the companies. But do you see that when there's like a new normal, would you go back to that spending spree in marketing, or what's your current take on that? Anyone, or I'm going to call names?
I didn't want to participate 2 times in a row, but in our specific case, we are not thinking about turning on again the marketing budget as soon as everything goes back to normal. We have been optimizing a lot of things in marketing budget, so we will be very fast to adapt to the situation. So we will be able to move either for a higher budget scenario or for a maintain lower cost scenario. So we can go both ways. We will see what happens and act accordingly.
Yes, we are kind of doing the same here. We haven't cut very much of the budget, and we're not planning to go online again with the very same strategy because the world have changed and things have changed. But we are doing a very intelligent way to relaunch some strategies as we need them to go out. But we are not planning to do the same marketing strategy as we planned last year to this 2020. Things have changed and we need to adapt to the context very wisely.
And I'll just add to that, Hernan. Basically, what we're doing is we haven't lowered our marketing expense. However, we are focused on optimizing our digital marketing investments, and we've done so since inception. However, right now we're very focused on moving towards using our non-paid users, which we have on our marketing platform. I believe that digital marketing expenses continue to increase, and maybe you as an investor could tell us more about this, but many of the companies I talk to, their digital marketing expense increases month over month, year over year. And going forward, this will be a very big differentiator to be able to have an organic flow of clients in order to lower or even disappear this digital marketing expense.
Okay. And guys, final question, and I guess this probably is going to be more towards the Sudarshan and Amin. You know, we received a question regarding, you know, WeWork and, you know, the whole collaborative approach that has been going on for a while. It's been seen as one of the big contribution of, you know, the 2008 crisis, the whole, you know, like gig economy or collaborative economy, how you like to take it. But, you know, a big fundamental of that collaborative economy requires, you know, physical presence on touch, right? So what's your take on, you know, how will that fundamentally change after this pandemic? And, you know, what's your current take on that?
Sure. I mean, I can start off. So I see this as the birth sector for co-working companies, if you ask me, for flex working, because many companies would now want more short-term leases or more flex leases for that matter, instead of the typical long leases which people are signing up for and investing heavily into the infrastructure, which really in today's time is like a deadlock for them, where they cannot terminate and walk away from their leases for that matter. So having said that, I just see that the next 6 months to 9 months is be the testing times for most of the co-working companies as such. But going forward, I think that's the most booming times for these kind of companies because of the kind of trends which is going to happen. Things which co-working companies are now looking at doing, something which is seen at WeWork, which is my work as well. in Bangalore is the kind of things which they're doing, which ideally in a normal office people would not do unless large occupiers with large organizations have these kind of infrastructure in place to take care of all the medical testing or whatever it is required. But WeWork has done a phenomenal job for us in India with respect to office spaces, how they've done, mapped each and everything, social distancing norms to each and everything, where they were cramping up spaces. Now they've tried to open up a little bit as well at the same time, trying to restrict every kind of social activity which is happening in the spaces. But from a very collaborative approach, I don't think so you can take away. Like the whole idea of the way Google, Facebook and everybody were building offices was for this. So whether pandemic comes, I just think this is going to be a short-term impact, and it's going to bounce back much faster than and recover much faster than what it was, right? So I just think it is a very short-term thing, but it'll revamp, and the whole collaborative thing, which today are people getting adapted to the whole Zoom calls and Microsoft Teams, etc. But I don't see that as a change, because this has been traditionally been running for 50, hundreds of years. You can't have a pandemic trying to change something which people have been accustomed to for years together. And probably the way people have influenced everyone that, hey, collaborative is the approach of working. You can't just take away the whole concept selling of what you've been doing for years together overnight just because of the pandemic. So short term, it'll bounce back very fast.
Okay.
I mean, briefly, I think we have maybe 1 minute or two, so I would be super brief. So I think on the collaborative business models, especially on the residential part, I'm a bit of a different view, especially taking into consideration the health hazard right now and people being more cautious. So I think business model like Airbnb or equivalents won't be super trendy, I would say. I mean, we already see that a lot of either from the landlord side, they are taking their properties from Airbnb, looking for more sustainable solutions where they can rent property on the market directly. Because there is this demand, of course, right now because of the restrictions, but also I think this is something that people will be in people's mind anyway while traveling. It will be difficult for them to go and stay with in an Airbnb space, sharing the space with someone they don't know. I think somehow it's going to be somehow the hotel's revenge somehow, because like they're gonna be providing more control over the space in terms of cleanliness, in terms of privacy, and of apartment that operators have full control over, I would say.
Okay, well, thank you very much. And with this, we have extended our time, and thank you very much to the panelists who have been so generous with their time and very interesting insights. And well, thank you very much, everyone, for joining us today. Would you like to remind you that tomorrow we have at the same time another panel with VCs and incumbents in the property sectors to hear, similar set of questions, but certainly with different insights. So again, thank you very much. This panel will also be posted online for future viewing. And again, thank you for IDB Lab as our sponsor and our partners, Iliad Partners. And thank you very much, everyone, for joining us tonight. And good night. Good day, good night, whatever. So thank you, everybody.
Bye.
It's been a pleasure.
Thank you.
Take care.
Bye.
Thank you. Bye.